Welcome, everyone, to our new quarterly webinar. I'm Executive Editor Chris Gessel of IBD and Leaderboard, and with me is my good friend and colleague Justin Nielsen, who I'm sure many of you know from our live seminars. We've got a lot to cover today, so let's get started. We're going to start off with some announcements of changes and improvements to Leaderboard, and then because we've got so many new people with us tonight, we're going to give a brief overview of how to use Leaderboard, what your daily routine should be. We'll take a look at some of the notable stocks, both up and down, and lessons learned from those. We'll take a look at the Leaderboard Performance year-to-date, and then I'm sure something that's on everyone's mind is the current market analysis, especially with today's big reversal. We'll also look at some current leaders that may be near a buy point, and of course we got plenty of time to take your questions and answers. So let's dive in. The first announcement is this webinar itself. We're going to be doing them every quarter now, usually the second week after the quarter ends, and we're going to be updating the performance, letting you know any changes in the product or enhancements we're planning. Of course, we'll review the stock action and look for the stocks that are setting up, talk about the market as well. So look forward to these after every quarter. Then, the idea for having a quarterly webinar came from a survey that we put out maybe about 6 weeks ago or so. And so a lot of you who took the survey made that suggestion, and that's something that we've always listened to your feedback since we introduced Leaderboard 3 years ago, and we've made a lot of changes and improvements based on what you tell us. So please keep sending us emails, calling customer service and the concierge line. We definitely want to hear what you have to say. This is another thing that we added because of that survey, and we are now allow you to turn on and off the chart annotations, and you'll see a green A right up there in the corner of the chart. And, some people say, well, when there's so many annotations on the chart, they'd like to look at a clean chart, or maybe because of resolution issues, maybe an annotation is sitting on top of a line or a price bar. So this is an easy way for you to turn off the annotations and then turn them right back on. And if you forget how it works, don't worry. Every time you log into a new chart window, the annotations default back to on, so you'll never be without them, at least for too long. Another improvement that you may have noticed is we've added full annotations and analysis to the sector leaders, so up to 16 additional stocks that we're looking at every day and updating. And that brings me to another point. I'm sure a lot of you have noticed that there are a lot more updates to Leaderboard throughout the trading day. And just on the homepage, on the leaders list, we have 11 updates scheduled throughout the day. So we have a pre-market, right after the market opens in the first half hour, another update, mid-morning update, early, it's like the early, mid, late morning update, all sorts of updates. But it comes up to 11 times a day that we're republishing and making changes to either the intro story, the leaders near a buy point, or the other leaders on the list. So we're keeping a very close eye, and hopefully you're enjoying those updates. Let's see, what else do we have going? Oh,
well, we also have the emails. So emails, a lot of people say, hey, you know what, I can't sit in front of my computer the whole day. So one thing that we've been having available for you is that you can have emails sent to you, kind of updating you. We have a midweek and an end-of-the-week leaderboard and market action update. So this kind of lets you know what has been added to the leaderboard list, what's been added to the cut list, has anything been moving around, also what's been going on with the market, has the change in trend happened with the market. So in addition to those emails, you also have now the ability to have alerts sent to you. Now, alert emails will let you know exactly when we add stocks to the leaders list or cut list. And this is basically as soon as the decision is made, you will be getting that email alert shortly after. Now, if this is something that you haven't done already, what you need to do to enable this is you need to go to your leaderboard subscription. So you log into investors.com. When you click on My IBD
on investors.com,
so your regular login, My IBD, And then under the account settings in the profile, you'll see Update Email Preferences. Okay, and then once you click on that, there will be a checkbox, and you check that box so that you get your leaderboard updates. That's all you got to do, and then you'll receive those leaderboard updates and alerts throughout the week. With that said, let's go ahead and do a quick overview of Leaderboard. I know we have a lot of trialists with us and people that may not be as familiar. So just to make sure that everyone's on the same page, we normally start on the Leaderboard homepage, and this is where you're going to get the leaders list. And every day, as Chris said, you're going to get this article updated throughout the day with information on what's happening with the leaders currently. Now, it's also very important, and this is on pretty much every single page. We have, what is the market doing? Is the market in an uptrend? You'll see a green up arrow. Is it an uptrend under pressure? That's when it's time to be a little bit more cautious. That'll be a yellow up arrow. And then when things are getting a little bit more rocky, when you should be raising cash, the market will go into correction and we'll have a red down arrow. So first of all, you should always be aware of the direction of the market.
And when it is a red down arrow, the market in correction, that doesn't necessarily mean you go to 100% cash. You're just turning more defensive, harvesting your profits, and really making a decision as, do I have a couple stocks that I want to sit through if this is an intermediate correction?
Yeah, it's definitely time to take stock and see, what is it that I'm going to try and hold on to and what needs to be gotten rid of a little bit sooner. Now, as you scroll down, you're going to see two sections. There's the leaders near a buy point and then the leaders. So the leaders near a buy point, these are stocks that are either just under their buy point, so they could break out any day now, or they've already broken out. They've already gotten above their buy point, but they're still within 5% of their buy point. So once something gets above 5% from its buy point, that's when it's getting extended and your risk goes up a huge amount to get shaken out if you try and buy once you're out of that 5% window. But the leaders near a buy point, these are the ones that are more likely to be actionable the quickest. Now, as you scroll down, you'll have the other leaders, and these are stocks that are either extended right now, so you're waiting for another opportunity to get into these stocks, or these are stocks that are currently basing, and so you're waiting for these to get near a buy point so that you can act on it. Now, if you've already bought these stocks because you've been a Leaderboard subscriber for a while, then we're going to be putting in the analysis, both the article and on the chart, some guidance as to how you might be handling the stock based on its current chart action. And it's very important that you do take a look at the articles to the side, to the right of each of these smaller charts, because it's letting you know some updates on the technical action and a little bit about the backstory too. And I'd say pay particular attention to anything that's in boldface. That's something that's really important for you to take note of, such as a buy point or maybe a sell signal that may have come up, or even when an earnings report is coming up. So a lot of great information there. Now, if you click on any of those smaller charts, a big chart will come up, and one of the first things you'll notice that on the left-hand side, you'll have the IBD stock checklist. Again, very simply, this is 29 key data points with red lights, green lights, and yellow lights, letting you know if this passes or fails many of our indicators that we're looking at for our stocks to determine their strength. So we're looking at the earnings, the sales, margins, return on equity, price and volume action. So you'll see exactly what's going on. If the stock has some red lights, that doesn't necessarily mean you can't buy it, but it does let you know this might be something you need to look into a little bit further to make sure it's got some very strong parts to make up for that red light. Now, when you look at the chart itself, you'll see that there's a lot of blue and red signals and black. The blue is basically your good stuff. This is the stuff that's going on that's on the buy side, and the red is usually the stuff that's going on the sell side. So right now we're starting on the weekly chart, and you'll notice that we have in blue when a stock has been added to the leaderboard list, the leaders list, and we have in red when it's been moved to the cut list. And we also let you know in blue where the buy points are, and in red where some selling signals may have occurred. In black, there's informational things like this is the first stage base, second stage base, third stage base. This is where it got to its IPO price. If you go to the daily, you'll see some more annotations there. And as Chris said, these are located for all of the leaders stocks, all of the cut list stocks, which we'll talk about in a second, and the sector leaders now. all of
and the top 10 of the
and,
IBD 50.
and the top 10 of the IBD 50. So there's a lot of stocks that are annotated here for you. And the annotations should be treated not as recommendations, but as educational and a good confirmation that you're analyzing the chart properly. So on the daily chart, here if we blow this up, you can see that we've got a lot more information here in terms of whether or not the stock has broken out of a recent consolidation area, a base, has there been support, all these different things that kind of let you know what's going on with the stock, where is it hitting resistance, and where has it, maybe clicked off some sell signals. Now, to the cut list, this is kind of the stocks that are either running into some trouble, they've flashed some sell signals, or these are stocks that are maybe setting up potential short sale opportunities. Now, shorting is kind of a different animal, and you want to be very careful shorting if you don't have experience in the market. It's usually something we reserve for a deeper correction because your chances of success just go up significantly if you're dealing with the right type of market. But here's an example with Michael Kors. Now, Michael Kors was a stock that we had on our leaders list multiple times over and over, and more recently, it moved to the cut list on June 16th. Because it was just flashing a number of sell signals, it was showing overall weakness. Now, a few weeks after that, or actually a month or two after that, we put on that's a short sale candidate because it kept on getting resistance at its 10-week line, kept on getting turned away, and so when it got turned away at around $83, we put that as a short sale possibility. Now, again, if you don't have experience, this might be something that you look at the annotations for a while to kind of get a sense of what's going on so you understand how this works. But a lot of different ways to profit in up markets and down markets depending on, what type of market you're given. And finally, there's a lot of information here, and we want to make sure that people are using all of these things that they have available to them. So if you're not sure, schedule a free product training session. This is the quickest way to make sure that you're getting the full benefit out of this product. And the easiest way to do that is to call either 1-877-887-0630 or just go to www.investors.com/leaderboard training, and you'll get a one-on-one session, and someone will just walk you through the entire product. Now, if you've been looking at this product for a while and you have any questions or feedback, because as Chris said, we do listen to feedback, make sure you give that number a call, and we'll set you up with one of our concierge services so that they can answer any of your questions or provide additional product training for you. So with that overview given, let's go ahead and get into some of the leaderboard action that we saw in this last quarter.
All right. Well, the third quarter was in some ways challenging. The small cap indexes actually topped right on the day that on July 1st, the day third quarter started, and they're in an intermediate correction right now. The NASDAQ and the S&P had a little trouble and then came back, and now they're back in a correction. So it was not necessarily an easy time to be investing, but if you're following rules, there were some good opportunities. And that the first opportunity I want to talk about is GoPro. And really what we've been seeing over the last month or two is that, stocks that have been on the market a long while and have had, already a major move, they're having difficulty making more gains. But these new stocks, IPOs, are where a lot of the action is. Now, this is another nice benefit of Leaderboard, because GoPro and a lot of other IPOs, because they don't have a long record of earnings or maybe their relative strength numbers are low, they're not going to show up on the IBD 50 or sector leaders. So we're always on the market team running our own custom screens and looking for these sorts of stocks that maybe fall through the cracks, maybe might be turnarounds or IPOs, and if they meet most of the criteria, we debate them and we'll put them on. And that's exactly what we did with GoPro back in, I think it was in late July when we finally put it on there. So,
and here was one where the EPS rating was a little bit lower, but it had some really strong growth in the last few quarters.
I think the EPS rating on this is 40, but it's got great triple-digit earnings or strong double-digit earnings in the last 3 quarter. So it's really a stock that caught our attention, and they're the maker of those wearable cameras, high-def cameras that, people are jumping off cliffs and running into walls and stuff like that.
My brother-in-law does mountain biking, so he has this on his helmet all the time, and it makes me sick to watch it. Just he's going down and falling down, and, oh, look, here's my bone sticking out now. But
someone's got to make all those YouTube videos.
Right, exactly.
Thank goodness.
So looking under the daily.
Yeah, so let's zoom in on that. And we put it on while it was making what we considered an aggressive entry point right around 45. There was some resistance in there, and so we put it on the list at that point and highlighted that as an aggressive early entry point. It popped above that for a couple days and then retreated. If you had bought at that point, you really needed to take your 8% loss, maybe even quicker at that time, because it is an untraditional buy point. But a couple, maybe a month or so later, it comes out of a normal IPO base and starts moving higher. Now, IPO bases, they don't have to be 5 weeks like we want to see for a flat base, or 7 weeks for a cup with handle. They can be as little as, 8 or 9 days. We've seen them that short, and maybe 3 or 4 weeks. And this one was probably a little longer than that. But anyhow, what we're looking for is that first consolidation, because we get asked all the time, well, why don't you just put them on the day they go public? Well, you could always be looking at a Facebook where there's a lot of hype, it ran up, and then that stock was dead money for a year, right?
And Facebook's not the only one. Sure. Baidu did the same thing, and these are things that eventually turned into leaders, but why sit with that dead money for so long? Why not just wait until you get the proper base and then act on it? And then you have some trading history, so you know how to handle it, too.
Exactly. You know how much volume it has. Is it really an institutional quality stock? How does it act day to day? Are there big, wide swings, or does it trade tightly? You don't know any of that on an IPO. You don't know what it's going to do. So that's why we like to wait for the first consolidation and get a feel about a stock before we start putting it on our list.
Now, even though GoPro had that 8% drop from that aggressive buy, you kept it on the leaders list that whole time, right?
Sure, because there weren't, other than it falling 8% from an unconventional buy point, there weren't any sell signals. There wasn't any unusual action. In fact, it was a pretty nice, smooth consolidation there, and then it broke out towards the end of July at 50 and really started running. And within just a few days, it was up 20% in 3 weeks or less. And we've got that annotation boxed in green. And the reason, that's one of the rules that really separates an average leader from maybe a top-tier big winner. And they often show that kind of initial strength bursting out of a base like that. So when a stock is up more than 20% in less than 3 weeks, then we automatically hold that stock for 8 weeks. And we really try to avoid any sort of shakeouts and let it prove itself. Mm-hmm. Now, in the case of GoPro, it was pretty easy to hold. It ran up. It's been getting supported. It's 10-day line. That's that green line. So a very short moving average. It's very strong. It's almost doubled since then. Pulled back over the last couple days, and actually, yesterday it went into new high ground and then reversed. So maybe we're getting into an area where we're going to have a little consolidation here, which would be normal. But so far, that's the type of action we love to see.
And right now we're in the 7th week from that breakout.
Mm-hmm.
So we've got one more week to go. And the benefit here is after 8 weeks, what you do is you reevaluate the stock. You've got 8 full weeks, and now you take a look and you say, where am I at? How much cushion do I have? And that can determine, is this something that I'm going to hold for a longer-term gain, or am I going to take some profits right now because I've booked some decent profits and I'm just going to take them? Or, because we've been holding the 10-day, maybe if it breaks the 10 days significantly, then I'll sell. So you've got a lot of different ways to handle it.
The strength of the market can figure it in.
Absolutely.
Yeah. Mm-hmm. So there's a lot of things that go into that, but at least you've got a rule to say, okay, I'm going to sit with this and then evaluate it.
And most importantly, when those stocks, and this happens all the time, these big leaders, right around the 4th or 5th week, they will have a nasty shakeout that it's scary.
Let's go to the next.
Speaking of which.
Mobileye. Now, Mobileye is a maker of automobile collision avoidance technology. They're also working in driverless car technology. Again, they came public and almost immediately started correcting. So let's take a look on the daily. There's really not that much activity yet on this stock. So it made a nice little cup base over a few weeks and then broke out just about at 41.60. And a lot like GoPro, it was up 20% in 2 weeks. So now we're holding for 8 weeks. But unlike GoPro, this one had some wild swings.
It tested your mettle a little bit more.
Your mettle. Now, it's a whole lot easier to sit with a stock like this in a market like this when you have a rule like the 8-week hold rule.
And that's not to say it's easy. You definitely, I'm sure, get the emails when people start getting a little nervous and, are you sure this 8-week rule is,
Everyone knows who they are who email me each time when this happens. But now, what's the one caveat to the 8-week rule?
Well, of course, if the stock loses all of its profit, so it had that 20% profit within 3 weeks, and it loses all of that profit and starts getting back down to its purchase price, its original buy point, well, that's unusual. That's not what our model book stocks look like, and so there you might have to get into a more defensive posture and cut it. But for most of the big winners, they don't do that. That's just not what they look like. Now, another thing that might kind of throw people a little bit is when the market goes into a correction, how do I handle that? What do you usually tell people?
Well, I've discussed this with Bill many times, and you hold it. I mean, unless the world is collapsing or something like that, but then I think we all have bigger problems.
Yeah.
But the rule really supersedes what is going on in the market, and these two stocks are excellent examples. Why? Because the market has been under pressure and in correction for most of these runs, and they're new. There's not a lot of new merchandise of this quality hitting the market right now, and so there's a lot of interest in it, and they're acting very well. So that's a perfect reason. When it went from 56, 58 all the way down to 46, that would be a tough time to hold. But you didn't round trip, and then the stock found support and came back, made a new high a few days ago. And again, this one is trading a lot more wildly than GoPro, but again, I think we're about 6 weeks into the holding period, maybe 7.
Yeah, maybe 7.
Okay.
So they don't all go up like that.
Yeah. A lot of leaders will go up 20, 25% and then start consolidating, and especially when they don't have that big burst coming out of the base. And so that's why you'll see especially on the daily charts, we'll be noting that this stock is up 20% from its last buy point. And in many cases, that's a really good place to take profits. You don't always have to, but it's a really important part of portfolio management to be taking 20, 25% profits on a lot of your stocks, because then when you get a GoPro, for example, you're operating from a position of strength. And if you've got realized profits in your portfolio and now the market starts getting weak and you've already raised some cash, and now you can really focus in on the 1 or 2 stocks that you think might be big winners. That strong mental attitude all comes from taking these intermediate gains.
And again, it has to do with that velocity of, how quickly does it get that 20% profit? When it happens in the first 3 weeks, that's a different animal. But when it takes a number of weeks to unfold, that's more of your single hitter, right?
Right. There's nothing wrong with singles. So Skyworks, which makes chips that are used in mobile phones, last week when they tore down the new iPhone 6, they found some Skyworks chips in there. And so, this is definitely a top-tier supplier to the mobile phone industry. And you see from the 42.59 buy point from where it broke out, it was almost 3 months until it went up 25%. Now, let's say you didn't act on that. The stock went up a little bit more, and then we got this big sell-off last week where it sliced through the 50-day, the biggest point loss of its run. Volume was really big. Let's jump back to the weekly chart, and you can also see another sell signal on there. I think it's right there. We jump to that one, and you'll see last week when the stock cut through that red 10-week line and look down at the bottom, you see a big red spike in volume, much higher than average. That is one of our long-term sell signals. What that tells us, in most cases, either the stock is going into a longer correction instead of maybe a flat base or a 7-week cup with handle. Maybe it might be 10 or 13 weeks, something like that. Or it also is a sign that we see when stocks top ultimately, and then they roll over.
And then they're done.
and then they're done. So that's why we pay close attention to that. So if you've been in a stock like this, you're sitting with a 20% gain, and it cuts through like that. That's really a time to sell, because in most cases, not all the time, but in most cases, you're looking at either a prolonged correction or the top of the stock.
And it's interesting because with this stock, Skyworks, that level in which it did break below the 10-week line was almost the same exact level where we were pointing out you could take your 25%
let's
profit.
go back to the daily chart, because the other thing about that, and I think that you had talked about that earlier, let's look at how that stock was acting. It kept going up and pulling back.
Mm-hmm. Right. So at this point, one of the things that can really benefit you is if you took that money off the table at 20 to 25%, this might just base again, and you can always buy the stock back. So a lot of people are very concerned, well, why would I sell this? I'm only up 20 to 25%, and this could be, going up even more without me, and then I'll be upset. And sure, that can happen, but in a lot of cases, they base, and if it's a strong stock, it'll break out again and give you a whole new chance to buy it. And the big benefit is you have that money either not at risk or working in something else during the time while it was basing.
So now let's take a look at a stock that didn't work quite so well, and that's always part of investing. You're never going to have about 1,000%. Even if you're, only getting 40 or 50% of your picks right, with proper portfolio management, cutting those losses tightly, and then taking a lot of 20, 25% profits, and then you get a stock that really takes off. You don't necessarily need to have a real great batting average to make good money in the market. So GasLog was a stock that we talked about last time in our previous webinar, and it was showing great earnings growth. This is a company that owns ships that transport liquefied natural gas. So, of course, with the shale boom, there's a lot of natural gas out there that needs to be moved from the U.S. to other places. Of course, there's all the issues going on in Ukraine. And, it hit our screens after its volume started really building. When it first came public, the volume was kind of thin, but then when it broke above 16, 18 in that area, volume really came into the stock, and so we were waiting patiently for a place to buy it, to put it on the leaders list, and we got that when it made a nice cut base. It was a little deep, but we've seen these work plenty of times. And in fact, when you go to the daily chart, we alerted readers to a pretty aggressive early buy point just as it was coming through the 50-day moving average. That was what we call a shakeout +3 buy point. Not something that most people know about. It's usually something we cover in the more advanced seminars at IBD, but that's one of the benefits of Leaderboard. We can take these advanced concepts, even if you're not a long-time market animal. You can get these insights of how to get into stocks early like this.
And even if you've been with us for a long time, some of these things aren't that easy to recognize. No. So you've got a little bit of hand-holding to recognize it.
And in fact, it looked like we really nailed it, and for a couple weeks we did. And it, broke out of there, went past the conventional buy point around 28.99, and went higher, was out of the 5% buy range. And then the market starts getting weak. This thing sells off hard. And, all of a sudden it's below the last buy point. So again, it had gone up more than 10% from the cut-buy point and gave all that back. And so that's just a good, again, it goes back to money management. It is not normal for stocks to go up more than 10% and then give it all back. It happens sometimes, but most big winners do not look like that. And so when, faced with that situation, the best thing to do if you had bought it $28.99 is sell it when it goes back to $29, or maybe you take a little bit of a loss, but it's not a stock then that you wait for an 8% loss. You want to get out flat when you've been up like that.
Especially the way this came down. This wasn't a nice little trickle down. This was a big
a lot of volume sliced right through it. That's another reason that you might want to use stop orders. I mean, even though I don't know about you, but we have access to the market throughout the day, although we're very busy in meetings and doing all sorts of things. And so I use a lot of stop orders just for two reasons. One, I'm not always by my computer, but also it takes the emotion out of investing, because you're not sitting there watching this thing plunge and then making reasons why, well, maybe this time it'll be different. It's showing a little bit of support. I'm going to wait till the close. All those kind of things that we've all done. For me, stop orders, whether they're actual stop orders or what I use at TD Ameritrade trade triggers, which are very nice, get you out immediately, and it's like having a trading plan each day before the market starts.
I actually make my stop order, when I make my buy purchase. So I do it at the same time, because otherwise I'm afraid I'll forget. So I just do it at the same time. I put in my buy order, and as soon as it's filled, I put in my stop order, and I just calculate. Okay, where's 7 to 8% below my purchase price? I put it in. That way, if I'm on a plane or whatever, it doesn't matter. I'm not doing, what do I do now?
Right. So this stock is also a great example of why cutting your losses, not letting any loss get bigger than 8% is so key, because the stock comes down, it gets support at the 50-day. If you had bought it from the cut-buy point, you're underwater, but maybe you're saying, well, it's acting okay, maybe I'll stick with it, and look what happens. It takes out that shakeout +3 buy point. Now, if you were, had been holding it from 29, now you're really in trouble. And let me point out, before the big reversal today in the market, when it was trading under 20, it was 36% below its high from just a couple months ago.
If you're sitting through something like that, it's hard to recover. That's a lot of ground that's got to make up.
Right. We don't want anyone to find themselves in a 36% hole, and that's why cutting your losses and moving on to the next stock, maybe looking at what went wrong. Maybe you bought maybe too extended. Maybe the market is the issue. Maybe we made a mistake in stock selection. Whatever the reason is, you don't want to let a small loss turn into a big loss.
And make no mistake, we were pretty bullish on this company. Everyone was talking about, it's got the product, it's got the earnings, but one thing is, we will never argue with the chart. Once we saw that action, hey, this isn't acting right. We're going to take, the cautionary route. And as we said before, this could have come back, and if it did, it probably would have jumped right back on the leaders list.
Right.
It didn't, So we always leave ourselves that option to change our minds.
Right. And eventually, it could turn around. Obviously, the shale revolution is real. There is, growing demand for petroleum in all its forms, and so I'm sure this will, at some point come back, and if the numbers are still good, we'll be on it. If not, we'll be looking at something else.
Let's talk a little bit about performance for the leaderboard.
Well, it's been, a challenging year. We've already had maybe 2.5 corrections. The jury's still out on what's happening right now. We'll get to that in just a moment. But through the third quarter, Leaderboard is more than doubling the S&P 500 this year. A good bit of that performance in the third quarter came from GoPro and Mobileye, but we've had Facebook and other stocks that have been doing very well. And then the other stat we always like to put out there is, from the time that we started Leaderboard in July of 2011, up to now, when the market's in a confirmed uptrend, we're also doubling the S&P. And the reason for that is, in general, you want to do most of your investing when the market's in an uptrend. You don't want to be fighting a market that's going down. We talked about that a little bit ago. But it really is, if we get into a more prolonged correction, you do not want to be trying to hold these stocks, and at some point you probably would be going to 100% cash. So anyhow, focus on when the market's going up, when stocks are breaking out, taking those profits, cutting your losses, and at some point we're going to reset this market and really start over in a fresh bull, and I think we'll all have a lot of fun and a lot of good returns from that.
Yeah, that's when in those bull markets, that's where, as you said, the fun starts. That's where these big leaders make phenomenal moves, and so that's what we're kind of waiting for.
One thing before we move on, I just want to let everyone know that on August 1st, we changed the manner in which we were calculating gains. We're now using equal weighting rather than price weighting, and I know that some of you had questioned why we were using price weighting. In general, price weighting better reflects the way a CAN SLIM portfolio should be handled and how it performs. Because when you price weight a portfolio, at the end of each day, you essentially put a little bit more money in your winners and take a little bit more money out of your losers. With an equal weighted portfolio, that's turned around. Every day, you're taking money out of your winners and putting them into your losers. So from that point of view, it's not really the ideal way to track this sort of portfolio. The issue that we were coming up with is that we've got some outlier stocks, some stocks that are trading at very high prices like Chipotle or Priceline, things like that. And it was really starting to affect how we were handling the stocks, not because of what was happening in their day-to-day action, but their price was so high that if we made a mistake, it would just really hurt the overall performance. And so that was one reason why we had took Chipotle off the leaders list going into earnings, because we were a little nervous about that. So anyhow, with equal weighting, that won't be an issue anymore, and we'll just proceed from here. So you were just talking a little bit about once agreeing that once we get into a real bull market, it's going to be a lot of fun. And I think that brings up an important point. We don't know how long this current correction may last. It might have been the bottom today. Who knows? But the fact is, we do know that there's going to be another. I'm jumping ahead. I'm sorry. Anyhow, so let's look at the current market. Okay, so today we've already been getting a lot of messages and questions coming in. Well, why wasn't today a follow-through? Well, the basic reason is earlier this morning, it actually took out the low from 4 days ago, and so this is technically the first day of a new attempted rally. What happened during the day was the Fed minutes came out and gave some indication that with quantitative easing ending this month, that instead of raising interest rates 6 months from now or 5 months from now, whatever, they were kind of indicating that there might just be a time interval before they started raising rates. Now it was more clear that the data would shape how they act. And especially in Europe and other places in the world, the data right now does not look too good. I mean, Germany had a big drop in industrial production this past month, and if Germany's in trouble, there's not much else supporting Europe these days. So that's not good, but I guess that really, I mean, the other issue was the market was oversold. It had, we had seen the put-call ratio jump to over 1.15, I think it was 1.17 last week. It was running at 1.05 earlier in the morning, so there was some fear, but it wasn't too excessive, so that's something that's going on.
And for those people that aren't aware of what that ratio is telling us, it's the put-call ratio is basically telling you the puts are how much bearishness there is out there, and the calls are how much bullishness there is out there. So when you get anything above a 1, that's letting you know that there's a little bit more fear or bearishness that's going on in the market. So especially, as you said, when you start to get those higher levels above 1, those usually do correspond to bottoms. Not always, and not on the exact day necessarily.
Yeah,
but
and
it's a useful psychological.
Could be a short-term bottom. Could be a longer-term bottom. Some other things that are going on. We don't know if this is the actual bottom. If this will turn out to be the beginning of a new upturn. We do know that this market is now 5 years old since the March 2009 bottom, actually 5.5. 3 years since the correction in 2011. So by any standard, this is an old bull market, and a market in which you would expect that there's got to be some sort of correction to reset the bases and kind of clear the decks. There's been a lot of bullishness, is measured by the Investors Intelligence Survey of newsletter writers. So there's a lot of reasons to expect a correction. So I wouldn't necessarily be swayed by one big up day, because what do we know about big up days on the NASDAQ?
Gosh, those big up days, you see them, the biggest of the big up days are during bear markets.
Right.
And we're talking about, this doesn't even compare to those biggest, like we're talking 10%, 14% days that don't mean a thing because they're happening in the midst of a huge bear market.
Yeah. So for people who've been following the market for a long time, this is not unusual, and it doesn't necessarily mean the market has turned. We've seen days like this many times where you have a big day and then maybe the market goes up for a few days and hits resistance at its moving averages again, or just rolls over and starts selling off. But we'll let the market tell us, because we're not trying to outsmart the market. We're trying to follow the market and be on the right side of the market.
I'll be honest. I've thought that a correction was coming just around the corner for the last year and a half, and I've been wrong. But I have no problem adjusting my actual money management towards what the market is actually doing. It doesn't matter what I think. The market's not going to care what I think. You just got to follow what the chart is telling you.
Right. Yeah, we've had a lot of abbreviated rallies where you need to be taking profits maybe quicker than 20%, even 15%, keeping those losses tight at maybe 3, 4, 5%. So really need to follow where you are in the market cycle and react accordingly. One other thing, maybe two more things, and then we'll move on. One is that let's go back to the market chart page. Some people have asked, and there's this sentiment like, oh, we're in a bubble. Well, there may be some elements of a bubble in other markets, but in the stock market right now, we're not seeing the kind of action that is associated with big bear markets like in 2000 or 2007. And I'd say one of the indicators that's best about this is the amount of margin dollars out there. And while the nominal amount of margin debt is very high, when you look at the year-over-year change in margin, it's absolutely normal. And what we've seen in 2000, 2007, and back in the 70s as well, this is an indicator that's worked well for many years, that you get maybe like a 50% increase in year-over-year margin, or sometimes close to 100%. That's kind of the time when you've had a huge run-up, the market's going vertical, we're getting lots of climax runs, things like that. That's when you get one of these major bear markets. So I guess from that point of view, if this correction persists, I would expect it to be more moderate, a good 10 to 20%.
And even visually on the chart, it looks very different.
Yeah.
I mean, when you get those bubble periods, and just if anyone goes back and looks at March 2000 or November, December of 2007, it just looks very different when it gets into that bubble phase. And as you said, it's like everyone is doing whatever they can to put more money into. I just need more money to put in the market.
Right.
I think that there's been enough things going on in the last year and a half where people have been like, oh, I don't know. We have all these economic things going on and news that has caused these smaller corrections that I think have kind of shaken people.
This is not like the last part of 2007 where everything was going up and we felt like we were masters of the universe.
Exactly. Yeah, maybe that's the best indicator. Do you feel like you're a master of the universe right now?
No. One other thing, we know that the Fed is going to be winding down quantitative easing. It's been very clear the S&P follows the Fed's balance sheet, and when they've expanded it with this different rounds of quantitative easing, the S&P goes higher. When they go sideways or down, that's when we get more of the normal action in the market with correction. So that's another factor that leads us to think, well, maybe now we're really going to get that intermediate correction that's been 3 years in the making. Anything else that we need to talk about?
Well, let's talk a little bit about how people should handle things when there is an eventual turn in the market.
Because we don't know, like I said, today might have been the bottom, maybe it will be next week, maybe it might be a month or 2 months from now. And the thing is, you never know. The market's going to do what it's going to do. It doesn't give you a memo ahead of time and tell you to show up. And I think 2011 was a really good example. This was the last time we had an intermediate correction in the market, and the reason for that was there were fears of a recession in Europe, so kind of a similar situation that we're dealing with now. There was some really steep selling for a while, and then the market was very choppy and going sideways. It was difficult to make any headway. But in the week before Christmas, we get a follow-through, a pretty solid one, 3.2% on the NASDAQ on the 17th day of an attempted rally. So if anyone says late follow-throughs don't work, I point to this one and say they do. But, out of nowhere at a time where you're not really expecting a follow-through, we get one. And I know people around here were saying, a Christmas follow-through, that's, when does that happen? Very dismissive of it. But the fact is, right away, we started seeing breakouts, and we saw Buffalo Wild Wings and Intuitive Surgical, Celgene, Alexion, Continental Resources. All those stocks were on Leaderboard before they broke out at that time. And over the next 2.5 months, there were a lot of profits to be harvested from the market during that period.
And, of course, this is the reason why it's very important to stay engaged with the product. A lot of people, this was a 4-month correction where you were just like, oh, why am I even looking anymore? Nothing's going to happen. Again, it was Christmas. Hey, I've got the shopping bags in my hands. But by the time it became a little bit more where you felt like, oh, this might be real, the NASDAQ was probably at the 2,800, 2,900 level. It's too late then.
Right.
So we have these stocks on our Leaderboard list. Not necessarily to say go out and buy them right now, but, hey, these are setting up, and so that when the market does turn, you've got the research already done, you've got the stocks already kind of looked at, and you've identified the buy points or have the buy points identified for you on Leaderboard. So all you have to do is put in your order at that point.
And again, it's this is very typical. You get a flurry of winning stocks that break out immediately in the first week or two after the follow-through.
And those tend to be the best,
right.
The biggest leaders
Definitely
tend to break out in those first 2-3 weeks.
Definitely the easiest to hold.
Mm-hmm. Okay, let's talk a little bit about what's currently on our radar right now in terms of the leadership.
Well, a stock that we've had on a couple times and has been acting very well lately is Palo Alto Networks. And it really, it had kind of passed over a buy point, and then earnings came out and it zoomed up. And since that point, this stock has been acting like a champ, even in a rough market. And one way you can tell that is look at the relative strength line. And the relative strength line compares the performance of the stock versus the S&P 500. The rating, the RS rating, which is a 98, is that 96? 98.
Mm-hmm.
Is comparing the stock to every other stock on the market. So when you see a stock's RS line shooting up like that, when the market's in a correction, that's a real sign of strength. And so what's been happening the last few weeks, it made a 3 weeks tight buy point and tried breaking out the other day, then came back. Let's go look at the daily at this point. You can see it a little more clearly. So I guess that was probably last Friday where it tried breaking out, It pulled back under the buy point, and then today, when the market reversed, it reversed and is right back at the buy point. So if the market really continues to show strength, this is acting like a stock that's going to keep working. Now, I know that there was a question earlier of someone who had bought it around 101, and then, at 85, and then when it got above 100, then you're at your 20% buy target, sell target. So if you sold it at that point, nothing wrong with that. I mean, the market is weak. This is a stock that has a very high price earnings ratio, so it's going. We've seen in the past that it can be very, very volatile when the market gets weak. But the nice thing is, if you did sell it, which nothing wrong with that, you can buy it right back when it breaks out again, or maybe you want to wait for a better time. It all depends on what your goals are, your type of trading. I mean, we're putting these out as these are good guidelines, these are good rules, but then you need to make them work for the type of trader that you are. And if you're someone who can sit with big pullbacks, I'm not one who can do that. Then you can try to hold something like that. So if you had bought this earlier, maybe when we had it on Leaderboard back in I guess June or May, and you've got a much bigger cushion, I think that's again, you're in a completely different point where now you're up 40, 50%. It's a whole lot easier to sit through a 10, 15, 20% correction when you've got that kind of cushion.
If nothing else, your line in the sand of where you're going to ditch this stock is different. Right. If someone just bought it out of this 3 weeks tight, you have a very clear line in the sand. 7 to 8% is the max that you're going to lose on this stock. If you've got cushion,
I would probably say a close below the 10-day.
Exactly. The 7 to 8 is the max. You can obviously move that up a little bit so that you're not taking that, especially if you're going to be taking profits a little bit sooner. You might move that to 3 or 4%, down below your purchase price. There is a lot of flexibility here, and depending on where you bought it, how you would handle it, and
what kind of trader you are, what the market is doing.
And so sometimes you'll notice, sometimes you'll notice that the annotations that we put on there are kind of trying to address, different people, because someone who's been with the program for a while, may have bought this earlier and may be handling it differently. So make sure that you do read the analysis to kind of get an idea of, okay, this is a 25% sell from this point, but it might be different if you bought it at a different point. Let's see what else we got. Oh, Gilead.
Okay, well, Gilead actually just went on the leaders list today in the afternoon, right before the close. Very successful drug maker. They've got this drug Sovaldi, which is treating hepatitis, which is a huge breakthrough to actually eradicate that virus. So
game changer, I think, is what they're using. Yeah.
Sure. Yeah. Although it's very expensive, and there's been some uncertainty because other people are moving into this space. Gilead also, I believe, has some lower cost versions of that, so that's kind of thrown Wall Street for a loop. But anyhow, this stock was on our radar while it was making that base where you see where it says undercut of prior base low, resets base count. So we were watching this all the way through and analyzing the volume week by week. Doing our due diligence and debating it repeatedly in our meetings. And the reason that we didn't put it on at that point is because there was a lot more down volume in the base on the left side, and then as it came up on the right side, there was little volume, so not a whole lot of sign of accumulation. And then when it went through that 83.80 buy point, it really limped through there. There wasn't any, I think it was average volume that day, and on a weekly chart, it might have been below average. But after that point, then the volume really came into it. It started showing a lot of resilience, and then even that as it started making the current flat base, the first week down, the stock came almost all the way to that red line, the 10-week moving average, but it closed in the upper half of the range in high volume. That's actually support coming into the stock. And then it got support again 2 weeks later on a blue week where we're showing that could have been a buy point as well. And now it's been basing, it's actually in the 6th week of its flat base, it's getting very close to that 110.74 buy point. So we saw with the reversal in the market today, maybe if the market really does firm out, this might break out, and it would be an opportunity. Now, we've gotten some questions like, well, what should I do when the market's in a correction? You see a breakout. Typically, I stay away from the market, but if it's starting to look promising, I might make some what I call test buys. Maybe you buy one stock, maybe buy half position, because it's always a good idea to scale into stocks, not buy the full position all at once. What about you? How are you handling it?
I usually like to see some evidence of strength in the market. If I'm ever going to, for example, like today, there's some evidence of strength. Mm-hmm. I'd be much more inclined to make a test buy today than I would yesterday.
Sure.
It just changes my whole attitude on things. Because, the biggest thing is when I buy a stock, I want that nice confirmation that I was right. I like for my stock to be up, and when it starts going, back and forth, I know that could be just because of the market, but I start doubting, and it's just I'm not as certain. I like the nice clean pitches instead of the ones that are wide outside that I have to reach for. So
yeah, well, and so if that's the type of trader you are and you like getting out there, there's nothing stopping you from testing it. I would just be cautious in a market like this, because we know even if some of the we're not right on some of the wiggles, overall what we see is that the gains when the market's is in a confirmed uptrend are much higher than when it doesn't even come close.
Oh, yeah.
Than when the market is in a correction.
Yeah. So you can find that one that's bucking the trend, but usually your gains aren't going to be nearly as great.
Right, and it's highly unlikely you're going to construct a portfolio of growth stocks that will buck the trend in a down market.
One final thing on Gilead, just before we move on, is one thing, just be aware of this. Shortly after it broke out, something that was kind of letting us know that there was something special going on with this stock is you saw week after week of positive closes.
Oh, yeah.
When you see that, it's really kind of letting you know, hey, institutions are stepping up and they're getting into this stock. And so I
think there's 11.
Yeah, it's
anytime you get over 5.
Yeah, five or more.
That's plenty.
It's telling you that institutions are in. And if you want to see examples of this, you go back to 2009. All of the growth, all the mutual funds had gotten out of the growth names, and you saw them just piling back into Apple and Baidu and Priceline. Right. They had 13, 18 weeks in a row where they were up, and again, that was the institution. Right, exactly. So let's go ahead and go through a final stock, and then let's get some more questions in here.
I think this is our final stock, you silly.
Oh, okay, very good. So let's take some questions then. Getting back to the Palo Alto, someone was asking about whether or not the 3 weeks tight was a proper place to be taking profits. Well, you kind of already addressed that one, right? Let's see. You addressed this one about if it reaches the buy point for Gilead, should I even buy it in a market correction? Wow, you really nailed a lot of these. Do you see a buy point in the foreseeable future on GoPro? Could it be forming a high tight flag?
Oh, that's entirely possible. It's too soon to know now. I think you need at least a few weeks of consolidation, and it's got to be less, ideally, historically, less than 20%. I think we've pushed that to 25% because we've seen some other examples like that. But that would be, given how this thing is acting, that would be definitely a possibility. I don't know if it'll happen.
Right.
But that would.
And high tide flags are one of our more rare patterns. It's not something that you see that often. But when you do see it, it's kind of, it can be magical. It can really give you a nice.
Like a fairy.
It's a nice thing to have in your toolbox to recognize. So yeah, again, what you're looking at is a flagpole where you're getting a nice, strong move, and that's what we're seeing from GoPro right now. The next phase would be that flag of a very nice, tight consolidation. So if we see that. That could be something to watch.
But let's put it this way. I can almost guarantee you there will be another buy point.
Right, exactly. So, at some point, yeah.
There are very few stocks that break out and run up and don't give any buy points and then roll over.
Yeah.
So it really pays to be patient and not buy extended, because you might be saying, oh my gosh, I got to buy this. It just keeps going. It's making a new high. And right now, at one point it was 20% above the 10-day moving average. That's always a pretty reasonable place where you know it's going to pull back at that point. And I know some people who just automatically will take profits once a stock gets extended that far. So there's a lot of reasons to be patient. It'll set up, and there'll be another buy point.
Okay, so here's another question. It seems like by the time a stock shows up in the IBD 50, it's already extended in price after breaking out of a base, or maybe forming a late-stage base. So where are these first and second stage bases that we should be buying out of?
Well, the issue right now is that we're 5 years into a bull market. There are very few stocks that are building first and second stage bases. They're either the stocks like GoPro and Mobileye and maybe a few others that are new issues and new to the market, or maybe you've got stocks that undercut a prior base and reset their base count. But yeah, that's the reason why a lot of things seem like they're extended. They've been around a while. It's because we've been running a long time, and so that's why, I know a lot of people don't like it when the market is weak, but I like the idea of we're in a correction. I'm going to get a second chance. There's going to be stocks I missed before that are going to set up again, or maybe there's whole new names that there'll be a rotation, and so you're just getting another chance to do things right and learn from your past mistakes.
That's one of the great things about this IPO market having heated up in the last year. It's giving us all this fresh blood, all these new names, new industries even, to choose from. Why are there so little stocks selected for the leaderboard?
Well, I mean, the biggest issue that we've heard from our customers over the years is, I don't have a lot of time. I don't have 2 hours a day to sit through and screen stocks and have a watch list that's 40 or 50 stocks long. And so what we're trying to do is teach you as quickly as possible how to invest successfully, and give you a very focused, efficient watch list. And so in any sort of market, there's really not more than 15, 20, sometimes 30 stocks that are really top tier leaders. And we do have other parts of the list that are annotated. So if you're the type of person who wants more stocks, go to the top 10, go to sector leaders. You can then dig down deeper and look at the full IBD 50. And for people who are real market animals, what we see is they've got Leaderboard and they've got MarketSmith, and they're running their own screens and kind of doing what we're doing, which is looking for those few stocks that are falling through the cracks on the main screens in IBD. So I think that there's 20 stocks to watch and track and really have a good sense about is plenty. And if in a portfolio, even in today's portfolios where maybe you don't want to have 3 or 4 stocks, but 8 or 10 stocks, that's a lot of stocks to keep track of, especially if you're going to be trying to add shares to them and handle them right. So the whole idea is we want to be focused. We want to really try to find those best stocks and handle them right, rather than trying to play every little breakout that might be setting up and doesn't really have the earnings power behind it. I mean, one of the challenges, again, we're late in the cycle. There's a lot of extended stocks coming out of 4th and 5th stage bases. It's hard to put those on Leaderboard because we know that in most markets the win ratio on stocks like that is not that great.
Yeah, I think after the 4th stage base, your failure rate goes up to like 80, 90%. Some of them still work, but the odds just start getting more and more against you.
Yeah, if you're going to buy late stage bases, I would really look at sector leaders, because that's our toughest screen. I spent a lot of time building that screen and looking at what are the elements that the top tier really big winners showed before they broke out, and that's what we try to capture in sector leaders. And what we have found that 4th and 5th stage bases typically work Not a lot of examples of 6-stage basis, but still we're just so wired that we avoid 4th and 5th stage basis unless there's a really compelling reason.
And if we do buy them, we generally have our finger on the trigger, ready to sell them at a moment's notice. So here's a question that I'm guessing we're going to get a lot, because now that I just realized if we're doing the second week after the quarter ends, we're going to be coming into earnings season. So a lot of people have questions.
Perfect.
How do we handle earnings season with stocks like GoPro and Mobileye? Earnings are going to be coming out soon. How do you handle that?
Well, a couple things. I think having a cushion going into earnings, makes all the difference. I wouldn't necessarily be buying a stock like that ahead of earnings without any cushion. You could really be looking at a quick loss. I think it comes down to how well do you know the business, understand the business? Is the stock acting right? Is it an institutional quality stock? If you're, GoPro, how many shares a day does it trade? A lot. Yeah. I don't know. So that works into it. And the other thing is you don't see in quality stocks in their first and second stage basis, it's just not that common to see a big earnings miss. As you go further and further,
so later stage basis,
that's usually what causes those to fail. Is there's that's when you get an earnings miss. Now, there are things you can buy puts to protect yourself on the downside. There's all sorts of strategies there. Not really something that we have time to go into, but maybe we could talk about that offline, or maybe post something on the forums and explain that. But I think it comes down to, are you looking at a quality stock or not? And it's one thing that we've seen when especially when there's questions about the sponsorship of a stock or the integrity of the company, you can really run into troubles.
Here's a question kind of on the internals. What is the current makeup of the leaderboard team? Where do they come from? Who are these guys?
Well, a lot of us have been with the paper for many, many years. We've got, I would say, at least half the team is more than 10 years, and some of us are pushing 20 years right now. And typically come from a journalist background, but also have, very interested and active in the market ourselves, and we've been through all the seminars. And we also have a guy by the name of Bill O'Neill who's always available to answer our questions. So that gives us a little bit of help.
And let you know where you veer off the right. But let you know of any mistakes, right?
He makes that abundantly clear. But so that's where it's a lot of internal training and experience doing this.
Mm-hmm. So here's would you discourage adding to a position once it's beyond the buy point in this market? So I'm not sure if this question is talking about adding to a position that you already have. Generally, we like to add to positions if low-risk entry point has kind of identified itself. Like a pull back to the 50. The first couple times it pulls back to the 50-day and bounces off.
Yeah, let's jump back to the daily chart on Palo Alto. We'll give a good example of.
There we go.
So let's say you bought at that prior base, and the stock first broke out. It looked like it was around 80, 83 or something like that, and the stock went lower. It probably, I think it went down 7%, but then it came right back. So let's say you rebuy or you buy it at that point, and now on earnings where it gaps up, and you're saying, oh, this thing is really good. On that gap up where it's already extended, that is not a place to add shares. Mm-hmm. That would be a bad place. Now, let's say you decided you wanted to hold this, you weren't going to take a 20% profit, and it pulls back into the 10-day moving average, and that 3 weeks tight shows up. It's not a great time to buy because of the market, but that pattern is good, so it would be reasonable, at least if we're just looking in isolation at the pattern. That's when you add in. You add shares at follow-on buy points, and those could be pullbacks to the 10-week average or 50-day average. Maybe it's a whole other base. Maybe it's a 3 weeks tight. Occasionally, we'll have what's called a short stroke, where a stock gaps out of a base and then holds very tight and starts running again. So there's all sorts of places, but we highlight those places in which to add shares.
Okay, very good. Well, I think it's about time that we wrap this up and say goodbye. We went a little bit over on the Q&A, but it's always good to address those questions that we get, some really good ones.
And just to let everyone know that if your question didn't get answered in some form tonight, we're going to be looking at all those questions, and we'll be reaching out to you either in email or calls. So that'll take maybe a week or so, but we'll get back to everyone. And if there's anything you want to follow up with, feel free to post it on the forums. We've got market writers who are monitoring that, and if there's something that they're not sure of, they'll come to me or maybe David or someone like that. So there's lots of ways to get in touch with us and get all your questions answered.
And as we mentioned, there's that concierge and numbers that you could use, email. So yeah, definitely lots of places to get those answers for you.
So we will be back, I guess, the
3 months.
In 3 months. We'll see you in January. And if before that, we'll be in Bermuda doing a Level 3 destination workshop in November. We're all looking forward to that. And if anyone would like to come out and take part in that, Jonathan is promising us a golf outing.
Yeah. Chris and I will both be speaking, and we'll be joined by David Chung, who will also be with us.
And the great thing about that Level 3 is we go through both a roaring bull market and then one of these abbreviated rallies, and we show you stock by stock of how you handle a portfolio. And it's really kind of the missing link in all the education that we do at IBD. So I would highly recommend that. And then, of course, we have the Level 4 in December here in Los Angeles. Bill will be at that, as well as Scott and myself and the portfolio manager. So a couple other chances to get together before the next leaderboard.
And, especially relevant on that Level 3 simulation, it's the last one we do, it's on leaderboard stocks.
Yeah,
so
exactly.
You can see exactly how leaderboard could have been a very profitable thing.
Actual stocks and actual trading rules. All right. Again, thanks, everyone, for tuning in, and we'll see you in 3 months. Good night, everyone.